Hello, everyone. Welcome along to this MCS Pre-Seed Analysis Part 1 session from VIVA Financial Tuition. My name is Hugo Newman, and I'm the co-founder of VIVA Financial Tuition. So thank you so much for joining us. I realize that people are joining from all parts of the world, and you might be joining at a strange time. So we do appreciate the effort in joining us this morning at 10 a.m. UK time. So before I begin, I just want to show you some of the offerings that VIVA has for MCS, for the MCS in November 2023. This will only take a few minutes, and then I'll pass you off to the tutor for this session. That is Louise Setton. So I'll be introducing her very shortly. So what I'm going to do is I'm going to just share with you the course page for the MCS. And before I proceed any further, I'm just going to do a quick technical check just to make sure that everyone can actually hear me clearly and everyone can see my screen. So you should find a chat box. If you're on a desktop or laptop, there'll be a chat button at the bottom of your screen somewhere. And if you could click that, and if you just type, yes, I can see, and yes, I can hear, that will let me know that everything is functioning correctly from a technical point of view. Okay, that's great. It looks like everyone can hear and see clearly. So just going to be very quick about this. There's a link in the chat box already for this page. If you want to look at it in your own time, you can look through the different management case study resources and offerings that we have at VIVA. So if you scroll down here, you can see we have the course features section, which just explains in detail some of the features that you get with the standard course for the MCS in November 2023. And you'll also see then some of the additional features that you get if you're an elite course member. And I'll explain a little bit more about that further down. And you can also see a course syllabus here, which is basically just the structure of the course and the kind of order of elements that you will go through. You can also download your free course calendar here, and you can actually download the clean copy of the MCS pre-seen document on this page as well, if you wish to do so. So you can see here, your tutor is also introduced, and we have the course pricing as well for the different offerings that we have. So we have the standard course and we have the elite course. Okay, they're the two main offerings that we have for the MCS in November 2023. You can see the list of features here on the left. And this is everything that you get here for the standard course: the live webinars, tutor annotated pre-seen, applied theory sessions for E2, F2, and P2, 5 mock exams with solutions, downloadable course notes for all the lessons, and theory reviews for the objective tests as well. And then the elite course has all of these additional elements. Okay, so you've got mock debrief lessons with your tutor, you've got private tutor access via the online community, you have interactive workshops focused on exam technique, personalized mock marking, so you can submit your mock answers for professional marking, and you'll get personalized advice on your answers, what you can do better, what you're doing wrong. And you also have these exam technique workshop sessions that I mentioned. You get access to our private student forum where you can discuss things with your fellow elite students. You can raise concerns, questions, suggestions, useful articles and links, for example. And also then you have a pass guarantee, which means that if you fail your exam in November using the elite course, then you'll be able to repeat at no extra cost for the next window, and so on until basically you pass your exam. So the great thing about the elite course is that you have 2 payment options. Okay, so you have a one-off payment which you can make upfront if you wish to do so, and that would be $699 for the elite. And you can also pay in installments if you prefer, and that would basically mean one upfront deposit payment of £99 and then 7 £100 monthly installment payments over the next 7 months. Okay, so it does work out a little bit more expensive, obviously, overall, if you do decide to go the installments route, but that's the trade-off. You get the benefit of being able to defer payments, but overall it will be a little bit more expensive. Okay, so I do recommend after the session in your own time, if you want to go through this page, you can look at all of the different elements and you can get a flavor of what you get on the course. And there's also, if you're interested, the all access option. Now, this option is great for those students who are looking to complete 2 or more exams within the next year or so. If you're looking ahead after the MCS to the strategic level, the objective tests, the case studies, this is really a knockout value offer. Okay, so this is our best value offer. It's a subscription for 12 months, unlocks every single CIMA course on VIVA's website. All the standard courses are unlocked by this membership. You can see here everything that's included, and it's just $3.99 for that one subscription membership. So it's really knockout value. It works out at around £34 per subject overall for all the 12 subjects. So that's just absolutely outstanding value for award-winning tuition. And it will unlock, obviously, the case studies for each of the windows as well. Okay, so that means that the SCS will be unlocked for the next 12 months for November, February, May, and August, and you'll have access to them whenever you want. So whenever you're choosing to sit your exam, you'll be able to avail of that. It's also a great companion subscription if you're going the FLP route. For any students who are doing that, this has got everything that you need in terms of accessing theories from the objective test levels, and you'll be able to also obviously utilize the case study resources as well during each window. You can try it out. There's a 7-day money back guarantee. In case you don't like it, you can always ask for your money back. But it's really our knockout offer is the all access. Another great thing about the all access is if you do choose to become an all access member, then you'll get a £100 discount on that elite course that I mentioned before. So any elite course, people looking to do the elite course for this particular exam window, for example, if you do become an all access member, then you will get a further £100 discount on the elite course. Okay, so if it's $699 for the one-off payment, you will be able to get a discount of £100 and just pay $599. And the same then for the installment plan, you'll pay $699 overall instead of $799. Okay, so if you're interested in that, simply send us an email at info@vivatuition.com if you'd like to avail of that £100 discount after becoming an all access member, and we will be able to set you up with that. Okay. So I'm not going to go on much further about that. As I said, in your own time, do feel free to check out our course offerings for the management case study for November 2023. And I am going to stop sharing my screen now. And it gives me great pleasure to introduce you to Louise Setton, who is going to be taking you through the first half of the pre-scene for the MCS of November 2023. So I'm going to pass it over to Louise, and I'm going to stop talking.
Thank you very much, Hugo. So welcome, everybody. I hope you can also hear me and see what I've put up on screen. So I've put the pre-scene up on screen. Hope you can see that.
Just to let you know, Louise, yeah, I can see that clearly.
Oh,
okay.
Super. That's fabulous.
Okay.
Great. All right, then. So welcome to today. What we're going to do today is we're going to look at the first half of the pre-scene, and we're going to go through it and just think about what the information we need to know from it in terms to be confident when we come to the exam. So in the exam, we're going to be tested on how we can apply various areas of knowledge from F2, E2 and P2 to Cuppcar and to this car dealership that we're being told about. So to be confident to do that, we really need to have good background about the company, how it works, and the industry that it's in. So today we're going to cover the first half, more or less. We'll see how that goes. There is a lot to cover. So this is being recorded, and it will be something that you should go back through, perhaps pause and think about yourself at different points, because we have a lot to get through. So you might find that the pace we go at means you'd want to then watch it again and go a bit slow and just think about things. Now, we're going to, as we go through the pre-scene, we're going to think about those areas of F2, P2 and E2 that could be tested in the exam. We're going to think about different kinds of exam questions we could get in terms of what scenarios they could put to us in the exam. So knowing about Cuppcar and what it does and what the industry is all about, what this is going to help us do today and in the future sessions where we look at the industry analysis and the second half of the pre-scene, this is going to help us to think what could come up in the exam and how would I apply my knowledge to that situation. Really important that you feel confident that you kind of could work in Cuppcar and that you would have enough understanding of the business and of the industry it's in to be confident when you're giving answers in the exam that you're happy you're giving sensible answers. So that's the purpose of going through the pre-scene, and that's what we're going to start with right now. Now, what's going to happen in this webinar is I'm more than happy at the end to answer any questions. So feel free as we go through, if you've got a question, either save it up until the end of the webinar, then pop it in the chat box and I'll answer as many of those as I can. Anything to do with course fees or the content of what you get on the course, best if you deal with those by emailing info@vivatuition.com. But if you've got any questions about the pre-scene, about MCS, then those questions certainly I'll have a look at the end, and I'll try and cover as many as I can at the end. But I'm not going to be taking questions as we go through. So what's going to happen really is I'm going to be telling you lots of things about the company, about the industry, getting us excited about this and setting us off on the right track. But questions at the end, and I'll do my best to answer as many as I can. All right, then. So I think, therefore, we should start. So I'm hoping that some of you have already printed off this pre-scene and have had a little look at it. Obviously, it only came out yesterday, so you might not have read it thoroughly. You will need to go through this again and again afterwards to make sure you've really understood it. But let's kick off with finding out, firstly, a little bit about Cuppcar, and then more about the car dealership industry that it's in. So first of all, our little introduction there on pre-scene page number 2. So first of all, it points out that Cuppcar itself is a quoted company. So it's listed on a stock market. And first thing I'd say is that's important, isn't it? If we think back to F2, if Cuppcar wants to expand and invest, sources of finance, it could raise equity funds, couldn't it? By doing a rights issue, issuing some ordinary shares. Equally, of course, it could raise debt. It could take on a bank loan. It could issue debentures, bonds, or even, thinking again about an area of F2, it could issue convertible bonds. We need to be ready for a question in the exam that might ask us to discuss the impact and the advantages or disadvantages of these different options for raising of finance. Now, just to think a little bit more about that, and I'm hoping you can see my little hand there pointing to an annotation we've got on the pre-scene. Of course, having equity, ordinary shares and debt means that we'll be able to work out a weighted average cost of capital for this company. Now, a point for the exam is that you're not going to have to do any big calculations. Very important. No big calculations. CIMA have tested you on those types of things in the objective testing questions. But yes, you're going to have to explain. So we might have to explain the impact on the company's weighted average cost of capital of changes in the funding and perhaps on things like changes in the share price. Because Cuppcar is quoted on the stock market, it has a share price. Any kind of issue that might affect the reputation of Cuppcar that we could see in an exam might affect that share price. And the knock-on impact of that is it affects the cost of equity, which affects the weighted average cost of capital. So we could be making sure we're happy with discussing those types of aspects to do with funding. Now, it also says that Cuppcar operates 214 car dealerships, and they are in the country of Welland. So it is based solely in Welland. It is not overseas. Now, we've just noted down here some real world car dealers. We've given you 3 there, but you should investigate for yourself any others that you can find. Just have a little look or read through what have they done, what's their strategy, what's happened to them. Again, that can give you ideas for what could happen to Cuppcar in the exam. So we've given you Penske Automotive as good example, AutoNation and Pendragon. These are all different real life examples of car dealers. Penske is interesting. It's US, but it's global. And it also sells trucks as well as cars. Now, why is that? Perhaps an interesting thought, because when we find out more about Cuppcar, it does sell cars, not trucks. So there's another perhaps opportunity, something that could be presented to us in the exam, and for us to perhaps assess in terms of the financing of that or the implications of that for the business model of Cuppcar. AutoNation is another example of a car dealer. This is based only in the US. It's got 300 outlets. So it's a sort of similar-ish size to Cuppcar, I would say. They also do car rentals. So again, more ideas about what perhaps Cuppcar could do or may do in an exam situation, just from reading through some of these different real life examples of car dealers. Pendragon is a UK-based car dealer. It has agreements with 21 different car manufacturers. And later on, when we get a bit further, we will see, when we look at Cuppcar itself, the different manufacturers that it has agreements with, that it sells their makes of car. Pendragon is interesting because it's acquired a lot of other dealerships within the UK. It's been very active at acquiring dealerships. Now, again, we could think about that in terms of their financing. We could think about that in terms of, does the dealership fit with how Cuppcar creates value? So thinking a little bit back to the concept of value creation and business models, and whether a particular acquisition would really support what Cuppcar are doing, or whether it wouldn't really fit in at all. One other interesting thing about Pendragon is that they also acquired a IT company that sells dealer management systems. Now, we're going to talk a bit about the need to manage inventory really tightly. We're going to talk a bit about the need to have a good customer relationship management system. Again, all good things from the management level objective testing papers that you've covered. Pendragon is a good example then of, practically in real life, a dealer that has gone on to acquire an actual dealership system company. Just an option to think about if that was presented to you in the exam as something that Cuppcar could do. Okay, then. So Cuppcar operates in Welland, solely based there, as we've said, and they sell new and used cars. More about that to come. And they also sell related products and services. Now, when we get on to looking at those various different income streams, it's interesting to see the different level of profitability. And what we can see is that it's definitely the case that some of these additional products and services are more profitable than the actual initial sale of a new car. So we need to be thinking about those different levels of profitability from these different income streams. Now, as we would expect, Welland's currency is the Welland dollar, and also that in Welland, all companies are going to comply with international financial reporting standards. So F2, everything you know from F2 absolutely could be tested in this MCS exam. But again, from a perspective of you being able to write a narrative answer that explains something. So just thinking for a moment about the fact that Cuppcar is only based in Welland and its currency is the Welland dollar, then F2, of course, covers foreign currency. So might there be a question in the exam where Welland is purchasing perhaps from overseas or selling overseas, and it's got currency translation issues? Might it acquire an overseas subsidiary denominated in a different currency? Then we can think about consolidation of an overseas foreign currency subsidiary. So as I'm thinking of these things, and obviously to get through what I've got to get through today, I'm not going to be able to mention everything. We've got lots of notes in here in the yellow boxes of things to think about, but you can think of more. And as you go through this pre-scene, add to it the kind of things, the links to those different management papers that you've studied, things that you need to go and look at and make sure you could actually discuss, you understand them. Okay, now in this exam, as ever, you are going to be a financial manager. That's the level at which the MCS exam is set. Now, what that means is that you have certain areas of responsibility. So if we look at this little annotation, it gives us a good idea of the kind of areas of responsibility that you are expected to have. So in the exam, you are role-playing the financial manager. You will have a focus on risk. You'll have a focus on financing. You'll have a focus on monitoring a strategy. So KPIs become important. Balance scorecards, what measures would be important to measure a new particular strategy? What measures should we be using to monitor people's performance within the company? And then we're thinking about KPIs to do with their responsibility and what they can actually control. And we can also perhaps think about things like whether the dealerships should be treated as cost centres or profit centres or investment centres, depending upon what the individual dealership actually can control. So good for you to think about that role of that financial manager and all those areas of knowledge that you could therefore need to demonstrate in the exam. Okay, so let's move on to look at the background about these car dealerships. So now we're thinking just in general, we're not talking here about Cuppcar itself. We'll move on to talk about Cuppcar itself in the second pre-scene analysis webinar. But now in general, what does the pre-scene tell us about car dealerships? So it points out that car dealers sell cars to consumers. So this is very much a business to consumer type of industry. So we're going to need to consider consumer behaviors. We're going to have to consider marketing to the consumer. And the dealers often have multiple sites. And we know that Cuppcar has 214 sites, all within Welland. Each site is called a dealership. So that's what I'll try to make sure I call them as we go along. And dealerships, it says, have a significant amount of discretion. Now, what that means is they have a fair amount of control over decision making. I might say that it's a industry where the decision making is quite decentralized. Individual dealerships, and here we've got a nice photograph of a specific location, a specific dealership, they have an amount of discretion, for example, about setting the price of the cars they're selling. That makes us think then, doesn't it, that if these dealerships have a certain amount of autonomy, we might need to discuss the most suitable type of responsibility centres. So should they be treated as profit centres, investment centres, cost centres, revenue centres? So make sure that you have got the background knowledge to think about when those would be appropriate. Now, we know that Cuppcar has 214 of these such sites, all looking perhaps like this one that we can see on screen. We've got to be ready for the possibility of them wanting to expand. And I'm just pointing here to some thoughts we could have there. Would Cuppcar lease or purchase that site? What level of investment would be needed? Might there be any support from the manufacturer of the cars? Now, this is a common, in the real world, this is a common experience that the car manufacturers, let's say Volvo, because I have a Volvo car, if a dealership is opening a new Volvo dealership, the Volvo manufacturer would give them some support. Now, that could be some funds, investments, it could be some loans, it could be support in the branding and the marketing of the new site. Those are all things that also might be considered then if we were opening a new dealership. We'd also have to consider things like branding this new location to make it fit with the rest of our 214 sites. What about implementing all the IT systems that we would need? And later on, we'll talk about various different IT systems, but one that struck me as very important is having a really good inventory management system and management of the control of movement of cars between the dealerships, because this type of operation, this type of dealer will be moving cars between dealerships. It will have used cars, it will have new cars, it might have a customer who is 100 kilometers away from the dealership that actually has the car that they would like to buy. So managing the inventory and the movement of inventory is going to require significant IT infrastructure. And we need to make sure that any new dealership has all of those good systems in place. Okay, now how do these dealerships work? Well, they are franchised by car manufacturers. So what that means is there is a contract between the car manufacturer, like Volvo, and the car dealer, like Cuppcar. And each of these dealers, like Cuppcar, will have a number of different car manufacturers with whom they have a franchise agreement. Now, that agreement gives the right to sell those cars made by that manufacturer. Now, this agreement is going to be a contract, and it's going to be important, as I'm just pointing to on the right-hand side, it's going to be really important to fully understand the terms of that agreement with that car manufacturer. manufacturer. Now, that agreement might have guidelines about how to brand that dealership to make it look like, for example, a real Volvo dealership. It might have other kinds of terms and conditions about payment for cars, about the training of staff within the workshops or the customer service staffs. All of these set by the manufacturer, and all really important to maintain that franchise agreement. We could think of a very scary possibility in the exam where one of the manufacturers that Cuppcar has a franchise agreement with perhaps is not happy with what Cuppcar is doing. They're not following the guidelines. They are breaching some of the terms, and perhaps they might withdraw the franchise agreement. Now, what would that mean to Cuppcar? Would that mean they'd have to close some dealerships? What would it do to their reputation? What might that do to their financials in terms of perhaps losses? How big is that manufacturer to Cuppcar? All kinds of things that if we think about them in advance, we'd be ready to have some points to discuss in the exam. Now, if we were thinking from a Cuppcar's perspective of which manufacturer or franchisor to select and to have an agreement with, obviously we would need to have some criteria to assess that car manufacturer. Cuppcar doesn't want to do a deal with a manufacturer that then goes bust or that has reputational problems. So on the left here, we've just thought about a variety of things to consider if, in the exam perhaps, they asked us a question about Cuppcar is considering a franchise agreement with a different new car manufacturer. So lots of good points to consider here that you can have a look at. But one I wanted to just mention, so I'm just pointing it out for you there, is obviously in the real world, we're seeing a big move, aren't we, towards electric vehicles. And depending upon the country that you're in, there's legislation and there's targets for phasing out petrol and diesel cars and for going solely to electric vehicles. Now, as that's a move across the world, different countries are at different stages, of course, with that. But it's going to be a consideration, isn't it, for any dealer as to making sure that they are tying in with a manufacturer who's got future plans that are robust and strong in terms of the growth and the development of their electric vehicle offering. The dealership needs to make sure that it can move at the right pace to accommodate those changes. And I was just thinking that a dealership needs to start developing, doesn't it, its own charging infrastructure so that when it has a significant number of electric vehicles that it's selling, it has that infrastructure to keep those cars charged. We would have to think about having staff trained up to be able to deal with all of the issues to do with selling electric vehicles. And of course, the workshops where the dealerships do repairs and maintenance, those staff would also have to be fully trained up. So lots of good thoughts we can think about the kind of nature of a car manufacturer and how they're changing and how the dealership would have to make sure that it can respond and move at the same pace. Now, an interesting point is that a dealership can only sell new cars that are from that particular car manufacturer that they have a franchise agreement with. So each new location, each center, so as we can see the diagram, that each one of these locations has an agreement with one car manufacturer. And the only new cars it can be sold are from that one manufacturer. Now, that doesn't apply to used cars, and most dealerships locations like this one in the photo will sell the new cars from the one manufacturer. So this might be a Volvo dealership, it might be a Honda dealership, it might be a Ford one, but they can also sell used cars from any other manufacturer. So important to make sure you're clear about that. So if Cuppcar were going to open up, we're going to set up a new agreement with a new car manufacturer, then they'd have to consider a new actual dealership, a 215th dealership, to be able to brand up in line with the new car manufacturer with whom they have an agreement. And of course, they might want to open up 2 or 3 or 4 of these dealerships to sell that particular car manufacturer's cars. They might want them in different areas of Welland. So we can see immediately the kind of issues there to do with financing. And also, let's think about something to do with projects at that point. That would obviously be a project, wouldn't it, to go and set up and first of all, actually to negotiate, just let's think about that. So back to E2 for a moment, to negotiate a contract with the new car manufacturer, and then the project to actually consider where they should set up their new dealerships that are going to sell this make of car. So what kind of customer base would be appropriate for this type of car? Is it a real luxury one? Is it a more middle range car? Where would they put their dealerships? And we can then think back to E2, sort of project management, and what kind of team should we set up in order to make those decisions? Okay, then. Now, important point just to mention on the right here, regularly tested in this exam, is about the business model. When we get onto the second webinar where we look more at Cuppcar itself, we will understand what Cuppcar's business model actually is. And we need to realize that any kind of changes proposed in the exam on exam day could actually take that business model into a different direction. Does it fit with the way, and here's another thing that's tested regularly, does this proposition in the exam fit with the way Cuppcar currently adds value and creates value in terms of the way that it does its business model? And regularly tested is the concept of how does a suggestion in the exam fit with the existing business model of Cuppcar? How could it impact on those value creating activities that Cuppcar currently has? All right, then. Now, in terms of what a dealership looks like, it's going to have a showroom, which we could see in that photograph above. And that's where the customers will come in to see the displayed cars, to see promotional materials, and of course, to talk to the sales staff. Now, we need to think then in terms of that business model, what is it that Cuppcar does here that is really valuable to that customer? We could think about the skills of the sales team. We could think about the number of sales team available to help the customer when they come into the showroom. We could think about how many cars they have on display. Because on the one hand, a lot of different models of Volvo, for example, would give the customer a lot to look at, would bring them into the dealership and would help Cuppcar to get those sales. But high level of inventory, of course, comes with a cost. So we could think a little bit there about F2 and inventory management. We can think about the value chain and about marketing and promotional materials, that selling efforts in the value chain. And we could start to think about what does Cuppcar do and how does that add value from a perspective of a customer? In these showrooms, there's going to be signage, there's going to be hopefully a good layout, good lighting. And just for a moment, I would just going to mention, I read an article, and I'd encourage you to read any relevant articles that you see about the real world here and real dealerships. But I read an article about a particular dealership, I think it might have been Pendragon, where they were opening a brand new, and I think it was a Volvo dealership, and they wanted it to be the state-of-the-art, primary, new site that really did focus on that kind of Volvo reputation and brand. And they'd picked furniture for inside the showroom that was Swedish. They'd picked a sort of a look and feel that was very minimalist, in line with a sort of the feel that people have of the kind of Swedish design. They had food and drinks and snacks for customers while they were looking around the cars. And again, they were typical Swedish ones. Again, just trying to give that feel to the showroom that fits with the branding of the cars that are being sold there. Okay, now obviously they can't fit all the cars inside a showroom. So there's also going to be an outdoor car lot. Now, these are massive outdoor spaces where they will display cars. Typically, most of the used cars would be in the outside car lot, but also any of the excess new cars that they don't have in the showroom. Now, that obviously brings to mind the point about security of vehicles, and also thinking about insurance, thinking about controls of those vehicles. How does Cuppcar know where those vehicles are? And if staff are moving vehicles around, how are those kept track of? Thinking about controls over those. Potential that, we note here, Cuppcar's business model, as I've mentioned, there might be a proposal to change it, really radical proposal. What if there's a proposal to actually only sell used cars? Now, that would be radical, but it would certainly then give you lots of different areas of F2, E2, and P2 to consider in terms of the impact that that might have. Now, within each dealership, then, we've got the showroom, we've got the car lot, we've also got the workshop. Now, we mentioned earlier, didn't we, that actually the revenue and profits that a dealership makes, including Cuppcar, comes from sale of new cars and used cars, but also those additional types of services. And the workshop that each dealership will have will offer many of those services. So if we just look here, we've got the concept of maintenance of cars. So my car needs to be serviced once a year. And if you own a car, perhaps your car needs to be serviced as well. That is done within the workshop. And there is an income stream, a source of revenue for Cuppcar. Similarly, what if I had a minor crash in my car? Well, let's hope it's minor. I might need to get my car repaired. I could take it to the dealership's workshop. So both new and used cars will be brought to a workshop for maintenance, for repairs, for servicing. And also, of course, the workshop would do those kind of activities for customers who did not originally buy their car at that dealership. So it has its own customers, if you like, who have never previously bought a car from the dealership. Now, if we think about that workshop, there's so many different things to consider. If we think about risk management, P2, regularly tested in the exam. And I would encourage you to look back at past exam sittings, looking back at past exam questions and thinking about, okay, if they ask me that for Cuppcar, what would I think of discussing? Really, really good practice for you. Regularly tested is considering various different types of risk. And often in the question, they will suggest which risk they want you to talk about. So product risk, legal risk, reputational risk, operational risk has been a regularly tested area as well. Now, I think there's a lot of risks that I could talk about to do with the workshop. Certainly, there are health and safety and compliance and regulatory and legislatory risks of not complying with health and safety regulations. Also thinking about that, if the workshop doesn't comply with those regulations, what if a member of staff in the workshop was injured? I then think back to F2, the need to account for a provision for any compensation claim by the employee or for any form of fine for breaching any legislation. I'm also thinking about reputational risk if the workshop does poor quality work. Now, also worth remembering that on that basis, E2, of course, covered quality management. So what type of quality management approach? Again, let's think total quality management. Could you talk about that in a practical way as to how Cuppcar could adopt total quality management within the workshop type of activities? Now, imagine selling a car or repairing a car that's got a defect that you miss and it goes to the customer. Think about the reputational damage that might then generate. Think about the consequences of possibly losing the franchise agreement with the manufacturer that we've already mentioned. Okay, then. So some important aspects of the workshop to think about, particularly when we move on a bit, to realize that the amount of income and profit that's generated from the various activities within that workshop. Okay, so let's just think a little bit more now, specifically about new car sales. We've already said that new cars are sold by the car manufacturers to the car dealer. So Cuppcar buys those new cars from the manufacturer, and then they resell them to the customer. Now, that's very important to understand, that it is actually a sale of the cars to the dealer. And on that basis, managing the inventory you've got becomes very important. Obviously, you need to have a good inventory of cars to sell to customers, arrange to offer them. But equally, we do not want to have huge amounts of inventory that then becomes slow moving, obsolete, and incurs all of that cost in terms of inventory holding costs. Pointing out here to you on the, where my little arrow, my little hand is pointing, obviously there is going to be a big investment in working capital in having the level of inventory of new cars to suit the needs of the customer. And just a point to think about there, across the whole of Welland and 214 different dealerships, it's going to be important to make sure that the inventory at each dealership meets the needs of the local marketplace. So is this an area of Welland where they should be selling the bigger, more expensive models of the car, because that fits with the customer buying behavior and customer needs? Or should they be selling the cheaper make models of that car, because that fits more with the demographics of the local market? So that management of inventory, I think we can see, is going to be really, really important. Now, it points out that the franchises that the car manufacturer agrees with the dealership have strict criteria, the rules, if you like, the legal terms within that franchise agreement. Now, these bullet points out some, and these are so important. So the manufacturer says the dealer's got to have premises suitable for displaying the cars, experienced and competent sales staff, and properly equipped and staffed workshops. Now, that is all therefore about what Cuppcar is going to have to make sure they are doing. And it's going to be very important to make sure that the dealership, like Cuppcar, the dealer like Cuppcar, does make sure they're doing these things. Now, what if in the exam there is a suggestion of something that Cuppcar could do, but that might actually have a negative impact on the premises? Perhaps they're thinking of closing some of those 214 specific dealerships in Welland and centralizing what they do in perhaps only 150. Well, would they still have suitable premises for displaying the cars in the eyes of the car manufacturer? Might this be a cause of concern? If they were going to do that, would they have enough sales staff to give the service that the car manufacturer expects? So really important to maintain that relationship with the franchisor, the car manufacturer, that we're always thinking of the perspective of the car manufacturer. And if there are changes at Cuppcar, how would that affect what the manufacturer is expecting? Also on the left, of course, more important possibly, or equally important, is what is the customer expecting? So customer satisfaction in all aspects of what Cuppcar does. So again, thinking about that sales room and the sales advice they're getting, but also thinking about the after-sales servicing from the workshop and the repairs, maintaining customer satisfaction so the customer keeps coming back is going to be very important for all of the dealerships operating in this industry. Now, the car manufacturers actually monitor performance of the dealers. We haven't got listed here specific measures they use, But I think we could start to think of those types of measures, knowing what's important to the car manufacturer. And it's going to be very important for Cuppcar and other dealerships to make sure that they are meeting those performance measures. Again, if they don't, they run the risk of losing that franchise. But also, if they're not meeting these measures, that would also suggest that they're falling down in terms of meeting the levels expected by the customer, not just the actual car manufacturer itself. Now, we've just pointed out here, of course, as I mentioned before, gives you a few thoughts to have a look at. What could happen if the car manufacturer isn't happy and withdraws its franchise from Cuppcar? What if 10 of the 214 dealership Cuppcar has are all, for example, Volvo dealerships, and Volvo decided to withdraw the franchise agreement? That would be 10 locations with staff in them that now are not able to sell those cars. Now, thinking a little bit about negotiation skills, I think it's going to be very important when negotiating, so thinking about E2 here and negotiation skills, when negotiating with a new manufacturer, to make sure that the terms are ones which suits both parties, in that if there is a breach in achieving a certain performance target set by the manufacturer, is there a period of time in which the dealership has got time to resolve that and to improve performance? How long is that? If the car manufacturer can withdraw that franchise agreement, how much notice do they need to give? Thinking about negotiation, and that has been tested in this exam. How would you go about how should Cuppcar go about negotiating in this particular situation? So is it negotiating because they have failed in some performance measures, and what's going to happen next, and how are they going to deal with that? And reaching an agreement with the car manufacturer about what's going to happen would involve some strong negotiation skills. Now, what it also mentions here, which is important, is that the dealerships receive bonuses, sales incentives for achieving targets for sales. So for selling volumes of new cars, how many are Cuppcar selling? If they hit certain targets for the number they sell and perhaps for the revenue they generate from selling those cars, they're going to receive from the car manufacturer some form of bonus known as sales incentive. Also, it points out there that there could be incentives for customer satisfaction. Again, the car manufacturer giving a bonus to the dealer for achieving certain levels of customer satisfaction. Now there, I start to get worried about what if they don't achieve those? How much income might Cuppcar lose by not achieving these incentives? Now, later on, we get to see about the gross profit made on a new car sales, which includes this incentive. Now, that gives me a worry, because what if Cuppcar failed to achieve that incentive? What actually would the gross profit on the sale of a new car then fall to? And we're going to see that the gross profit margin on a new car sale is already very low. Real world now, folks, the margins on new car sales are really low. The margins on used car sales are higher, and the margins on selling the extra services like repairs and servicing and maintenance of vehicles, perhaps bodywork repairs, respraying and sorting out dents and scratches, selling parts to the customer who might want new mats to go in their car, or they want a new sat nav. Those things are even more profitable. So it might be that if the dealer isn't managing to hit these performance targets, and if they don't make the sales incentives and don't receive the bonus from the car manufacturer, the margin on a new car sale might be even lower. Okay, another point for you that I'm just thinking about, not written here, so make a note really, F2 and revenue recognition. When should a dealer recognize these sales incentives? What I'm just thinking about here is there's a risk here of incorrect accounting. If a dealer starts to recognize a bonus they hope they're going to receive when they haven't yet hit the targets that make it probable they're actually going to receive it. There are real life examples of companies who have recognized this type of income in their income in a P&L, and they've then been audited and they found to have recognized that revenue early when they should not have recognized it. So another bit of a pointer to you, just go and make sure you're happy with discussing when revenue should be recognized. Okay, then. Now, it points out in the next paragraph this idea of exclusivity. And the idea here is that the car manufacturer does give the dealer some exclusivity in that when there is an agreement between them and the dealer is going to have for example, let's say a Volvo dealership in a certain location, the car manufacturer will not do an agreement with another dealership to have a dealership within a certain geographical area of the existing one. So they will give an area around which the dealership is based where no other dealer will be able to set up a dealership selling the same make of car. So that's good for the dealer. They've got an exclusivity of a certain number of kilometers around each dealership that they have got. But this exclusivity works both ways because a specific location, a dealership, can only sell new cars of that brand. So where I bought my car, I went to a dealership. I bought a used car, but I bought it from a dealership, and that dealership sold Volvos, it sold Jaguars, and it sold Hondas, all new, and it had 3 separate buildings, 3 separate dealerships with 3 separate car lots. Each of those was completely separate. They were only about 500 meters apart in distance. You could easily walk from one to the other, but each location has to be branded up in line with the new cars that it is selling, one manufacturer. So that is a big investment to the dealer, isn't it? They do a deal with a new car manufacturer to open up 5 dealerships to sell that make of car. They've got to physically have 5 new locations, 5 new showrooms, 5 new lots of staff to actually do that. Okay, then. Now, important point coming up here that I'm pointing to, very important for us thinking about inventory management. It's the car manufacturer that decides the quantities and models of the new cars that will be delivered to each dealership. Now, there's something just to think about for a minute. A dealership cannot dictate what quantities and models of new cars they are going to receive. Now, on the one hand, we can see why, because of course the car manufacturer wants the dealerships to have a wide range of models to be seen in a showroom. But we have to also then think about the fact that that does mean there is a bit of a limit to what the dealership can control in terms of the inventory of cars that they have. And what that also makes me think about, so now here's another idea for the exam, P2 coming in. If a dealership receives 20 new cars of certain models, all branded up, of course, the same make of car, but different models, it might decide that actually some of those it might not sell because it's demographics in terms of the customers around it might be more higher end of the market. They're looking at more expensive models, might be more middle range. And what that might made me think of is transfer pricing. The dealerships might move some of these cars around. They still need to try to maintain a wide range of models in each showroom, but they might want to make sure that some of these new cars that might not be in the showroom, that might be actually in the parking lots, in the car lot, they might want to move them around so that they have the right inventory for the right dealership location. So again, I'm thinking there, P2, transfer pricing. How would they set a price? If this dealership has just bought a car, how are we going to set a transfer price to sell it on to one of the other dealerships within the Cuppcar group? I'm also thinking that inventory management is going to be critical. We need to consider how that happens, whether Cuppcar has really good sound inventory management systems, whether there might be a proposal in the exam to invest in some new inventory management systems. Now, we've just said then that earlier we said dealerships have a lot of autonomy. They do have a lot that they can control. And I said to you, so then we can think about whether they should be treated as cost centers or profit centers. And here therefore we could just change, we can just sort of add to our thinking here. Here is something that actually, in terms of what models of cars they're bringing in, that's where they actually have less discretion and less control. So again, a bit of an impact on how we are measuring the performance of those dealerships. Now, when we think about performance measurement, just pointing out here, balanced scorecard is something that you've covered when you studied your objective testing papers. And again, we could be asked about how we could go about implementing a balanced scorecard approach to evaluating the performance of the dealerships within Cuppcar. So would you be able to discuss in an applied way the different elements of the balanced scorecard that Cuppcar could think about implementing and what kind of measures they would need? Now, just as a separate point for a second to make sure you're really clear, the exam you will face will be asking you to apply all these ideas. The examiner will not give you marks for just writing the theory you know about balanced scorecards, for example. This is not about writing all you know about that, because they've tested you on your knowledge of balanced scorecards in the objective testing exam. This is knowing what you know about Cuppcar, and by the time we finished the 2 pre-scene analysis sessions, and you've read the pre-scene yourself quite a few times, and you've thought about it, and you've done some industry research of your own, you should be able to apply your knowledge to Cuppcar in a practical, logical, well-justified way, making sure that what you're saying ties in with everything we know about Cuppcar, how it supports the business model, how it would reflect on our workshops. So we're very much being applied in this exam. It's just a really important point, folks, to remember right from the start. Okay, then. Now, very important point coming up, folks. I'm just pointing here to it. In terms of the selling price of the new cars that Cuppcar actually has in its dealerships, the selling price is not set by the car manufacturer. The car manufacturer recommends a price for the new cars that are sold by the dealers, but that is only a recommendation. It's not mandatory. It's a guide. It's indicative. Very important that you know that. Just another exam technique point, very important in the exam, you don't write something that actually is a point that is not possible because it's wrong, because it's actually going against what we know about from the pre-scene here. So if you had the idea that the car manufacturer set the price of a new car and the dealer has to sell it to that price, you would be wrong, and that would certainly not be something that you would want to get confused about in the actual exam. So what actually happens is the dealership has discretion. They can pick a selling price. So they do have some control. Well, they have control over selling prices. And that's great because it enables them to think about that profit margin they're trying to achieve. Now, the recommended retail price includes an element of profit for the dealership. But if we just look down here, it's as little as 2 to 3% of that price that's invoiced to the dealership. So it's a very, very small element of profit that's built into that recommended retail price. So clearly there's going to be a really, really important activity, which is pricing activity, referencing there to P2 and pricing strategies. We know that the margins on new cars is quite small. The gross margin on sale of new cars is quite small, and Cuppcar is going to have to think about how they price up those new cars. Now, we must bear in mind when we're thinking about this, how competitive this industry is. And we'll see in a little while that actually in Welland, there are, I think it's 5,000 car dealerships. It is a very, very concentrated, competitive, saturated market. Now, what does that mean? It means that there are lots of dealerships in Welland run by different dealer companies, so run by Cuppcar or its competitors, who will be selling at the same make of car. So actually, the price is going to be very competitive. They're all going to be looking at competitors to see what they are selling the cars for. So pricing is perhaps going to have to focus on what is the competition selling this car at. And that's what's driving down the margins. It might be, just a little thought, that knowing that when a new car is bought from a dealership, that's a new customer who then will bring the car back for servicing, repairs, maintenance, perhaps some body work. Perhaps the customer will come back in 2 years' time to buy another car from Cuppcar and part exchange this one that they've bought. Knowing that how important it is to get a customer who then buys all the extra things that Cuppcar does, it might be that they might set a low price for the new car sales in order to almost treat the new car as a loss leader to get a new customer who then Cuppcar makes money from everything else they then sell to them through the life of having that customer keep coming back for all the additional services Cuppcar offers. It's another thought that when their new car is sold, the sales team are going to try perhaps to bundle in other things with that new car. Mats, whizzy new sat navs, a better sound system, some kind of protective coating to go on the paintwork. I know when I bought my car, we agreed a price for the car, and then the salesman gave me a list of about 10 extra things that he thought I should buy. It'll be really good for you if you have this treatment on your tires. It will be really good if you now buy this protective coating to put onto your car because it's white and over time it might discolor. It would be really good if you just upgraded the floor mats because these ones will resist dirt. He came up with insurance I should buy from him. He came up with all kinds of different guarantees and warranties that I could buy. I said no to all of them. I'm sure that did not make his day. He will have had commission based on selling all those, and the dealership would have made a lot more profit probably from the sale of those to me than they made from selling the actual car. So thinking with your pricing strategy about these extras is going to be so important. Now, also we need, of course, to think about negotiation too. The sales team are going to have to negotiate the selling price of a car. So going back to thinking about what would be those skills needed for good negotiation with a customer is another really important aspect of E2 to consider, which could be tested in the exam. Okay, then. Now, a little bit more here then about car manufacturers paying bonuses, as we already know, on sales targets of new cars. And it points out that these targets can significantly increase the profit from the sale of new cars. And that was my point about, I'm a bit nervous that if Cuppcar didn't hit these, actually the gross profit on selling a new car might even dwindle to nothing. And then we would question whether even it's worth selling new cars at all. Many customers trade in their old cars. So this is where we start thinking about the fact that dealerships do sell used cars, some of which come from the customer bringing in their old car and using it as a part exchange. Now, obviously, when we think about negotiating a sale of a new car, the value that the dealership would give for a part exchange of a customer's old car is all part of that negotiation. So that's another element to consider when we think about the sale of a new car, which might partly be paid for by part exchange of a used car. There might be commissions that the dealership might earn from the manufacturer from selling with the new car an extended warranty. So most cars come with a standard warranty, perhaps 3 years. I think my car came with a 3-year standard warranty, but the dealer did try to sell me an extra 2 years to add on to that, which was an extended warranty. Why did he try to sell me that? Because the dealership would have earned a commission from the car manufacturer from selling that extended warranty. Important to consider then that with the sale of a new car, it is not just as simple as setting a selling price. All of these extra considerations for maximizing the profitability that Cuppcar can make from all of the things that it can sell, all of its income streams that it could sell when it sells a new car. We really have to think about making sure that we're thinking about the profitability, I would almost say, about the customer and the lifetime profitability of this customer. They buy a new car, but they're going to keep coming back for servicing, for repairs, and that's where the profits might actually be. So thinking again about, yes, profitability analysis for each of Cuppcar's sort of different offerings, and also thinking about profitability analysis in terms of actually the profitability of a customer over its lifetime. Keeping a customer loyalty, so important. Now, in the next paragraph, it gives us some important facts, I think, about the actual margin made on the sale of a new car. So the average selling price is $20,000 dollars. But does point out, though, that that is very much an average. More expensive cars can sell at way more than the sort of top end of $40,000 dollars. And for us, we could think about perhaps a possibility in the exam of Cuppcar thinking of setting up some dealerships for really exclusive cars. So really, even, much more expensive even than the £40,000 upper level suggested here. Going into a really niche market, perhaps, of type of car make. Now, if we look at the gross profit per new car, 2,400, it's going to be important later on for us to look at what Cuppcar is making. And I think actually when we look at that, Cuppcar is actually managing to get a slightly higher gross profit margin on new cars than the average in Welland. Now, that might be because they've got slightly higher level of sales of more costly cars, that more of the higher end car brands, and they might be therefore managing to sell at a higher price. It might be because they are just excellent at negotiating with the customer, real strength and expertise in that. We can see that in the industry, the average gross profit margin is 12%. If there was a thought about Cuppcar going overseas, I think it would be interesting, of course, to determine if we could, and if we were given this information, what does that overseas market look like in terms of what levels of gross margin Cuppcar could make in that industry, in that country? It might be that there would be a very different nature of competition in that country, And it might be that a much greater margin could be earned. But on the other hand, it might be that it might be less. Now, this is where it points out to us really how saturated the Welland market really is. There are 5,200 franchise new car dealerships. So those locations, the photo we saw at the start, there are 5,200 of them across Welland. Now, obviously, we don't know how they are spread. And it might be that there are still geographical areas of Welland that are underrepresented. And they might be areas that Cuppcar could think of setting up and investing a new dealership location in. But overall, what I think we can say with confidence is this is a saturated market. There is a high level of competition. And that's so important, isn't it, for us understanding the importance of lots of good things from your studies, negotiation skills, negotiating a good deal with the car manufacturer in the first place, negotiating a good deal with a customer when you sell cars to them, new cars to them, but also negotiating good prices when you also sell other things to them to increase those margins that you're making as a business. Also thinking, obviously going to be really important to know the competitors. What prices are competitors, other dealerships actually offering these cars at? What prices are other dealerships offering maintenance and servicing of these cars? With all those dealerships, it's likely, isn't it, that there will be 2 or 3 located quite close to a customer. A customer will probably be happy to travel 5, 6, 7 kilometers to go to different dealerships to get a good price, a good deal. So highly competitive. The importance then, mentioned later, I'm saying it to you now, the importance of good information, good data, information systems, a bit of P2 there coming in, and the importance of information systems and data, and not quite thinking about big data yet, but thinking about capturing data from competitors, so sourcing external data and making sure that Cuppcar's got really good management information system and that the decision makers have got access to all of this information to enable them to come up with appropriate pricing strategies and to really be on top of what the competitors are doing. Points out the number of brands that there are being sold in Welland. So there's 30 popular brands of cars. So for example, Volvo, Honda, Ford, Jaguar, each of which has a network of dealerships across the country. 5 largest brands listed here, and in terms of the number of dealerships that they've got. And obviously, we would be expecting Cuppcar to have a number of dealers from each of these. But until we get to that, we don't know. It could be that one of these brands of car, Cuppcar, does not actually sell. And that might be a possibility in the exam. Might also be a possibility that there is a brand of car not listed on here, of course, that might be proposed in the exam as being one who has approached Cuppcar. They want to do a franchise deal. And we might have to be thinking about various aspects of that proposition. Good. Now, right at the bottom here of this page, I think we get to something that is very interesting, and that is the idea of fleet leasing. So the idea here is quite different. Some car dealers, so for example, Cuppcar, they do fleet leasing to corporate customers. In other words, big organizations. Think banks, think insurance companies, think telecoms companies, think large pharmaceutical companies, think any big organizations that you are aware of with thousands of employees. What's going on here is that organization makes an agreement with a dealer, and that dealer then supplies those cars in big volumes to the staff of that company. So we could be talking here, hundreds of cars in one specific agreement with a corporate customer. We could be talking thousands of cars. And what the deal is, what the agreement is is that the dealer will supply that volume of cars. So they will then buy them from the car manufacturer. They will then supply them. They will service them. They will repair them. And then at the end of the lease, they would come back to the dealer as a used car, and they could then sell them on as a used car as part of their used car sales. Now, I'm thinking that this is a very big opportunity, and it tells us in the next little sentence that when it comes to the car manufacturers' incentives and sales bonuses, these fleet cars will count as sales in the normal way, sales of new cars. So that would be big volumes of cars counting towards those bonuses. And for me, that is a very positive, big opportunity. But we now need to think, yes, but what else could that do? What could that mean to Cuppcar if they actually did agree a big contract with a corporate customer? I'm thinking of the impact on the workshops of suddenly having, in certain of the dealerships, perhaps near where this corporate customer's head office is, having a sudden demand for servicing and repairs for hundreds of cars. How would that be able to be carried out by that dealership? The pressure, the operational risk that would mean for those dealerships would be big. And also, how would that impact on reputation if suddenly the big corporate customer car fleet leasing service then meant that other customers can't get their car booked in for their maintenance? How would that affect the reputation of Cuppcar? How would that affect customer satisfaction? Now, just for a moment, F2, this is a leasing agreement, an operating lease arrangement. You need to realize from a lessor's perspective, that's what the dealer is. That's what Cuppcar would be here. They would be a lessor. They would be operating an operating lease agreement, or that's what it says the usual case is. And you need to make sure that you would know how to explain what the accounting for that means. And also, I would suggest, would you be able to explain how you would account for it if it was actually a finance lease? Perhaps there is a proposal in the exam that one corporate customer would like to do some kind of fleet leasing agreement, but it's going to be arranged as a finance lease, not an operating lease. Some good advantages from this fleet leasing: steady revenue stream. Once you've got a contract, this contract might be for 3 years, 5 years. Once again, this is a contract, isn't it? So negotiation is going to be important. If we are possibly, I was actually thinking about this and thinking that it might be worth, if Cuppcar got a big contract here with a big corporate customer, depending on the location of the corporate customer, it might also or even be worth Cuppcar actually building a separate dealership just to actually provide the services that this corporate customer needs. If this would be thousands of cars needing to be repaired and maintained all in one geographical location, all for this particular customer, perhaps there would be a proposal to build a separate dealership, not to provide services to external customers, but only to that corporate customer. So again, lots of thinking there. We've made lots of annotations for you about this type of opportunity. Now we need to just talk a little bit about the used cars. So used car sales. So this is where any car that's previously been owned and driven is sold by a dealership. Now, car dealerships will take, as we've already said, cars in part payment for new cars. So these are the cars that are part exchanged, and that will then form a source of these used cars, which then they will sell on. Now, a little bit of a note here: when a new car is being sold, the negotiation as to the value of the used car that's been taken in part exchange is going to be important, because if that is set too high, then the dealership could make a loss when reselling that used car. So again, there's that conflict between making a good deal, a good negotiation with the customer, keeping that customer satisfied, but also not giving away too much. in terms of the value of their own car they want to exchange because of the risk of selling at a loss when they sell it on. Now, it points out that the value of a used car is determined by lots of things: its age, its wear and tear, and the average selling price is $16,000 in Welland, and that's for cars up to 4-year-old. But different prices for different ages of cars. Now, important for Cuppcar then, when they sell used cars, to have understanding about their own business model and what age of used car actually fits in with their own approach and their own business model. And if Cuppcar is looking at being a very differentiated provider, upper end, great customer service, fabulous dealership locations, fabulous showrooms, expertise in that showroom in terms of the sales staff, if they're thinking about being at that end of the market, and by doing that, being able to command those higher prices, generating bigger margins, it's going to be important to them to consider what age of used car they would take, or if they do take them in, what they would then do with them. They could then sell on those cars that are too old. They might decide to move them to a different dealership in a different part of Welland. They might decide not to take certain ages of cars or types of cars as part exchange models. We've got in here a little suggestion, given that used car sales actually are more profitable than new car sales, would we want to evaluate the possibility that they might want to discontinue the new car dealership? But we now know there's lots of additional things you get when you sell a new car. You hopefully get the customer coming back under a warranty, and that is more income for the dealership. You hopefully get them coming back to have their car serviced. Again, more income for a dealership. So moving to only used cars would lose some of those income streams. I'm going to say, let's turn that on its head. What about the possibility that Cuppcar is deciding whether or not to actually discontinue used cars sales and only become a new car dealership? Now, initially, we might think, well, why would we do that? Because we would then lose that margin on sale of used cars. But there might be benefits to only being a new car dealership. Okay, then. We've got a breakdown now of where all those used cars are coming from. So there is the idea of a customer buys a new car and the dealership takes in a used car in part exchange, or a customer obviously buys a used car and they trade in their own car in part exchange. And we can see that that is almost, isn't it, 3/4 of the source of used cars on average for car dealerships in Welland. Retail purchases is where a dealership would just buy a car off a consumer, an individual, without selling them another car. They just would buy a car off them, a used car. And trade purchases, about 1/4 of the sourcing of used cars. And that's coming from when the dealership would buy from another company that deals in used cars. Now, just pause for thought there. There are companies, aren't there, who only sell used cars. They might be only internet operators. So I'm thinking about internet-based used car websites that I might use if I'm looking for a secondhand car. And they don't have any dealerships, any physical dealerships. They just operate on the internet. There are also, aren't there, some companies, organizations that only sell used cars, and they do have physical places where you can go and see the cars. So I'm thinking, for example, near me, there is a company in the UK called Fords of Winsford, FAW, and they have a number of very big physical car lots where they sell used cars. They are only a dealer in used cars. They sell them to the public. But this is pointing out that those type of trade purchases can also be a source of used cars for a dealership within Welland. They can go and get used cars from those trade purchase organizations. Pause for thought, possibility in the exam, should Cuppcar set up their own separately branded online sales of used cars as a online, if you like, kind of auction auction site for used cars only. Perhaps not brand it in the same way, have a different brand for it, but deal then perhaps in the older used cars through its own business that is only selling perhaps older used cars. So whenever we're reading this pre-scene, we've got to be thinking about what could come up in the exam. Okay, then. Clearly here, thinking about the sourcing of used cars then, very important to understand when you're buying used cars, the risk that comes with. Important when thinking about where you're sourcing your used cars, to think about Porter's value chain and understanding that sort of from procurement perspective, sourcing these used cars from reputable organizations, sourcing these cars in terms of cars that are fitting what you could sell as a used car. So matching what you're bringing in the form of used cars with what your customers are going to want to buy from you is going to be very important. And here we've just got a note about business intelligence systems, making sure we've got data in our dealership to know what kind of used car we would need for each of our different geographical locations and geographical dealerships, and making sure we've got a fantastic knowledge base and IT systems for sourcing the cars and then managing those cars and controlling the logistics of the movement of those cars around our various different dealerships. Now, another good point, F2, I'm just pointing at here, is working capital management. We've already mentioned it in terms of the deliveries of new cars, but we're thinking here about the sourcing of used cars. And obviously, this is going to be a significant cost. And these used cars are going to have space in a dealership. And they're going to have to be kept clean if we want customers to see them. So we're going to have labor costs involved in cleaning them. We're going to have people managing the car keys of all these for people to go and get the keys and go and look at them inside. So we have got lots of inventory management costs here with our used cars that we might have. And we need to think about how many used cars we should have at any dealership. And a little note there about working capital management, thinking about the levels of inventory we have, perhaps touching on economic order quantities, just to make sure we've got really good management of the volume of cars that we happen to have. Okay, then, good. So this section here is telling us more about what I've just been talking about. And yeah, just at the bottom there, it's pointing out that, again, when they sell new cars, they have to consider the value that they might give a customer for the trade-in of one of their used cars. And then it points out, as I've already said to you, that then what a dealership might do, if they get a car in that they don't want to keep, it doesn't fit with the kind of customer they've got, they can obviously sell it on to other used car dealerships or to an online used car type of dealership. Doesn't have to be a physical one. But also, if we think about Cuppcar, one dealership within Cuppcar's 214 might bring in a used car. They then might want to offer it for sale to the other dealerships, because another dealership might find that it is exactly what is needed in the geographical area that they operate in. Okay, mentions just at the bottom there of page 6, the need to therefore really focus on not having inventory that is too slow moving. We want to be turning over these cars. So inventory management in terms of monitoring how long have we had a used car and making sure that we are moving it on by some means, either selling it outside of Cuppcar if we need to make sure that we aren't incurring costs storing cars that aren't actually selling. Also points out value management again. So how does Cuppcar create value? You know, we do sell used cars and they do generate a higher margin than new cars. So we do want to offer a wide range of those cars. So can you see the balance? Inventory management, old stock perhaps that we might not sell, the cost of maintaining this inventory versus having a wide range to keep the customer satisfied, to bring in the customer. I know if I'm looking for a used car, I might go initially to look at one of these used car only dealerships where all they have on site is 1,000 used cars. And that kind of place, it's not a smart dealership. The showroom has nothing in it. The showroom is not a showroom. It's just a building with staff who can do a deal, sales staff, and who hold the keys. And if I want to go and look at the inside of a car, I bob in that building, I get the car keys, I go and look at the car inside. If I want to buy it, I go and talk to the salesperson and I buy the car. That is all there would be in that type of operation. But it gives me a good choice. Customers like choice, don't they? We like to go and see what the different types of car are. And when it comes to a used car, that's very important because all used cars are different. Just a point to note, we know already, don't we? The margin on used cars is a bit bigger than the margin on new cars. I'd like to suggest why that might be. And one reason that might be is, of course, the level of competition in the marketplace. It's saturated for new cars. Every competitor is looking at the pricing of every other one. That brings the prices down, doesn't it? Huge competition equals lower prices for new cars. Used cars, of course, one thing to think about them is they're all different. Every used car is different. How many miles it's done, what colors it's done, what accessories it's got, what model it is. They're all different. And on that basis, it's much harder for customers to compare used cars. In a way, we could say the pricing of those is a bit less transparent. So I think quite useful for us to think about the fact that that's why, perhaps one of the reasons why there's a bigger margin on used cars. A better price can be agreed with a customer because all used cars are actually different. But that does therefore mean we need to keep a big range of used cars to allow the customer to make that choice. Now, very easy to miss this, so don't miss it. Top of the next page, it points out the average gross profit margin in Welland for used cars is 16%. So that contrasts nicely with the new car gross margin, which I think was 12 from what we looked at. Important for us to remember those when we go to look at what Cuppcar is actually managing to get themselves. Okay, then. So let's just think now about those additional income streams that dealerships within Welland can consider and can think about. So we've got parts and service here. We already know that, because I've already said this, that the margins, the profit that can be made from these extra activities that a dealer can do are really, really valuable income streams. They can generate way more profit than the sale of new cars or even used cars. Vital that a dealer has got a really, really strong offering in terms of what it does offer, in terms of these parts and services, but also that it does them very, very well. Because, again, all dealerships offer this type of service. And in Welland, how many were there? 5,200. There's a lot of competition for these services. And make sure you're clear. A customer who buys a new car from Cuppcar dealership location A could go and take their car for servicing to, firstly, not even a Cuppcar dealership, or secondly, they could take them to a different Cuppcar dealership. So each dealership within the Cuppcar family, not only are they wanting to be really good to make sure that Cuppcar as a business has got a high quality in terms of its servicing and the services it offers, but in a way, all of the individual dealerships within Welland of Cuppcar, within traveling distance for the customer, they're kind of in competition too. So there's that element of competition in terms of offering servicing. And a customer might well be happy to drive to two different dealerships within Cuppcar's dealership network that happen to service that make of car they've got, if it means that they feel they're going to get a better service, a better price perhaps, from that different dealership. So part sales are one thing that the dealership often does. So the customer might want to buy accessories, and these can be a very high contributor of profits. So replacement for components that have worn out or are broken. I might go and get new mats. I've done that in the past. I might go and decide I'm going to upgrade my sound system in the car. Now, it's very important to distinguish the customer who might just come in and I want to buy a new set of mats from the parts that might be used by a dealership in the maintenance of their new cars. Because remember, we said new cars are sold with a warranty. It might be a 3-year warranty, standard warranty. Those warranties require the dealer to use parts of a certain quality. So if we are doing warranty work on a new car that is within its warranty periods, the manufacturer will only allow the dealer to use approved parts. And those approved parts come from the manufacturer themselves, or they come from companies that are authorized by the manufacturer. So what that does mean is, again, compliance with the manufacturer's requirements. The dealership must be very careful to use those approved parts. It also means it does put a bit of a limit on the control that the dealership has in terms of the sourcing of those parts and the cost of those parts. It might well be that there are parts that would be just as good to use, that would be cheaper, but they're not allowed to use them in the actual repairing of new cars, which are still under warranty. And also if they are servicing new cars in accordance with a servicing agreement by the manufacturer. Again, not complying with these rules could again jeopardize the franchise agreement. Now, the dealerships could sell parts to local garages if local garages not within the owns dealers group actually need some parts quickly. And I just thought, actually, gosh, what a challenge it might be now. So here's a different point in inventory management of the parts that you hold at each dealership. And if I think about Cuppcar and its 214 dealerships, imagine there's a workshop in every one of those. How many parts must they hold in order to be able to have the parts available to service the various different activities going on in the workshop? Now, we know that we have covered things like just-in-time management within P2, and thinking about just managing the inventory level of these parts and how that might be then stressed by selling parts to local garages, which means you think you've got a part in your workshop and you haven't because you've just sold it. You know, there's definitely inventory management issues here to be really sort of aware of, risks, if you like, of not having inventory in the workshop when it is needed. Often parts and accessories would be sold along with a car sale. So again, there's a demand for the parts. So being bundled up within a sale. And it points out that sometimes there is merchandise that might be held in stock by a dealership because a customer might want to buy it. So we're thinking here things like baseball caps, T-shirts, branded in the name of the car brand that's being bought. Now, obviously, you know, that is probably, I would imagine, a relatively small source of income for a dealership. Bigger perhaps for a really high quality brand of car. You know, if I was thinking about real specialist cars, then I can see that the merchandise might be quite desirable for a customer to buy, and that might command quite a decent price. But if I'm thinking about an average car brand, I don't think many customers actually buy the merchandise. I don't go and buy a hat with the Volvo logo on it when I go and buy a new car. In general, it's not what I do. So merchandise is available. It's carried in the dealership, but actually, do they ever sell it? Is a question I might actually ask you. Now, just at the bottom here, lots of thoughts to do with what we've just covered. I've mentioned quite a few of these. So I've mentioned P2, just in time. So considering a just-in-time approach to inventory management to get a grip of this inventory, make sure we're not holding too much. Also, not going to mention everything on here, but target costing mentioned in P2. You know, I've already said dealerships need to be monitoring the prices that other dealers are charging for everything, for new car sales, for servicing options, and looking at those and then realizing what price could be set in this market not able to sell it at a higher price because actually it's so competitive, we're going to have to settle for this price, the price within the market, setting what required profit margin we have, and then achieving that target cost to achieve that margin. And cost management going to have to be very, very important. Finally, just mentioning again TQM. I've mentioned it before earlier, haven't I? So here we just got a list of little points to consider, things you have covered, things to think about might be important for Cuppcar in terms of maintaining that top quality that they do. All right, then. Now, other aspects of these other activities they do, obviously, top of the page here, we've got servicing. So when a car is sold, of course, it will need to be regularly serviced. And typically this will be sort of once every once a year. That's certainly what we see in the UK. So when we buy a new car, it has to go back for servicing once every 12 months or after a certain number of thousands of kilometers, whichever happens first. Now, servicing is going to be done in the workshop. And that's going to have to be done in a way that provides convenience to the customer. And perhaps the dealer can add in their extra services to this to make it more appealing to the customer, to get the customer to come back to have their car serviced at the Cuppcar dealership, for example. Things like courtesy services, running the customer back to their home when they brought the car in for servicing. Loan cars for the day whilst the car is being serviced. Now, wouldn't it be good if the dealer could offer a maintenance plan when they sell the car, perhaps a 3-year plan, to tie the customer in to coming back to the dealer to get their car serviced. Now, that would be very attractive for the dealer because they can tie the customer in and they can obviously get the margin in from actually doing that servicing for 3 years. Stops the customer going elsewhere. So a useful source of income. Now, to do that, of course, we're going to have salesmen who are experienced about offering that servicing option and explaining what it involves. And the customer is only going to come and have the car serviced if the quality of the servicing within the workshop is good. So again, just thinking here about sort of conflicts between departments, if you like. You know, we've got sales team trying to sell servicing plans for 3 years, which is going to rely on the workshop having done good quality servicing in the past. A good reputation for servicing is what's needed by the workshop staff in order for the sales team to sell these plans. And that sort of relationship between the two departments could generate conflict. Mentioning conflict because, of course, conflict and conflict management is an area you've covered in E2. And what we're going to see perhaps more in the second webinar where we look at the analysis of the pre-scene is how there could be targets set for different parts of a business, which could cause conflicts between different departments. Now, repairs are another aspect of what could go on in the workshop. So not just servicing, but ad hoc repairs. If I have a minor damage with my car, I might bring it in for a repair. Now, if I am bringing in a car for repair that is not under warranty, then the workshop can decide how to fix that problem in whatever way they feel is best. But if I am bringing in a car under a warranty for a repair, not because I've actually had an accident, because one of the components of the car has failed, the car's under warranty, that means the customer can bring it back to the dealership fixes it, and then the dealership invoices the car manufacturer. Repairs under warranty are free to the customer. So what that means, though, is, of course, that the repairs are very much then controlled by the manufacturer, excuse me, because the manufacturer will require certain approved parts to be used if a car is being repaired under a warranty. Okay, just had a little glass of water. Oh, there we go. Just getting rid of that tickle in my throat. Okay. Now, very important issue, a real life issue, we need to be aware of for the exam as a potential scenario. What if there was a product recall by a certain car manufacturer? So what if, for example, Volvo said all Volvo V40 models that were manufactured in 2016 need to go back to a workshop to be fixed because there's a problem with their brakes. Now, that can happen. And that's a potential exam scenario, isn't it? We need to think about the implications of that for a dealership who suddenly is going to have a load of cars coming back in to be fixed. And I'm thinking there about the issues there to do with pressure on the workshop, the risks attached, operational risks with pressure on the workshop if there was suddenly a product recall. Now, the other thing I would say about product recall, which we have mentioned, is obviously any kind of product recall really affects the brand image and reputation of that make of car. But if you're a dealership selling that make of car, unfortunately, that negative impact can also spill over onto your dealership brand, because often a customer doesn't necessarily think, oh yes, this Volvo dealership is a Cuppcar one. They just go, this is a Volvo dealership. So recalls of Volvo cars can have a negative impact on the Volvo dealership. So just an important point, really, about that sort of impact of a product recall. Now, so there is another little point on the right, which I'm just going to mention, conscious of time, folks. So I want to get through as much as possible. There is another possibility here, which is just a good idea to think about as well, which is these warranties are manufacturer's warranties. So they are offered by the car manufacturer, but it's possible, exam scenario, that Cuppcar might decide to offer their own warranty. So they would offer their own warranty. You pay, the customer pays for it. What it means is that for that warranty period, any repairs covered by the warranty are repaired free for the customer, and Cuppcar would bear the cost. Now, I think it's quite an idea, which is quite a feasible one to consider, but imagine there the amount of data we would need to understand the costs of repairs, the frequency of repairs that cars might have in a certain time frame and a certain age of car, and how much that could cost Cuppcar, so that they could then price up this warranty appropriately. I'm sort of flagging the risk that Cuppcar considers selling their own warranties where they incur the costs and they set a sales price for the actual warranty agreement with the customer, but where it could be possible, if they've not set an appropriate price for the warranty agreement with the customer, they could end up making a loss. Now, a final aspect that goes on within a dealership is bodywork repairs. And this would be, so fixing paint, scratches, fixing dents in the car. So having skilled bodywork staff to repair that kind of damage. And again, that could be required if a customer has some form of an accident. Now, what I'm thinking about that actually is that actually requires a very different setup in terms of the workshop space. This is about spraying paint on a car. It might be a new car. It has to be perfect finish. We can't have dust in that paint. And this is therefore requiring a spraying booth. This is requiring cleanliness. And I'm actually thinking that this is kind of a very different activity to what is going on in the rest of the workshop. And I know when I bought my car, so this is just a thought for you, that the dealership I went to did not have a bodywork repair facility. They had a third party they were in partnership with. I'm thinking F2 joint ventures now. And when I wanted to get a bit of damage on my car, when I had accidentally run into a bollard in a supermarket car park, when I wanted to get that fixed, I went to the dealership and they said, I'm very sorry, we don't do that, but this is the company that we use and we can put you in touch with the right person that you can then go and get your car bodywork repaired there. I'm thinking F2, some form of joint venture with a bodywork repair shop, such that Cuppcar itself does not have to have that facility to do these kind of repairs themselves. I'm also thinking, what if Cuppcar, another exam suggestion, what if Cuppcar decides to have a specific bodywork repair division, and they decide to actually set that up themselves? What would be the investment? What would be the skills? How would that fit with the value that Cuppcar are currently generating? How could that work logistically? Okay, another area of income to consider: finance and insurance. So finance and insurance, this is where the dealer is earning a commission. So commission for introducing a buyer of a car to a bank or a lender or a leasing company to help them actually fund the purchase of the car. And also where the dealership can earn a commission for providing the customer with a company that will offer extended warranties. So this is a very different source of income. It's commission-based, isn't it? So if you like, the actual offering here is done by a third party, and all Cuppcar are doing are earning a commission. Now, there's some good things about that, isn't there? Commission means that the dealership itself does not have to provide these services themselves. They're getting a steady income, and they haven't got the operational risks themselves of delivering these activities. But what about the reputation of the lenders that they're working with? And it points out here that, again, you know, Cuppcar's reputation could be damaged if they work with finance companies or providers of extended warranties who themselves suffer a damage to their own reputation. It points out if a customer has a bad experience with a bank or leasing company, that could not have a knock-on impact on Cuppcar's reputation. Now, generally, car dealerships do use third parties to provide financing, to provide these other services, and they do just take a commission. Point I'm just going to say to you is F2, revenue recognition. How do you recognize a commission? Because actually how Cuppcar would be operating here from IFRS 15 perspective is as an agent. They are earning income, which is a commission. How should they recognize that income? So there's one to go and think about. It then tells us on the next page a little bit more about this. It's talking about the service plans and extended warranties that dealerships actually can recommend to the customers. So that means the customers pay in advance for servicing or maintenance, could cover about 3 years. And of course, what that will do is it will earn the dealership commission. Now, what I'm now thinking about, just pointing at for you, is that there's a bit of an ethical issue for the dealers, the dealerships. You know, we want to sell the extended warranties because we get a commission. We want to sell a service plan because we get a commission. But is it in the best interest of the customer? From a customer's perspective, is this really adding value? Are they selling maintenance plans which actually are more expensive than the customer just bringing in the car and paying themselves for a repair when it is needed? So we need to consider the business model of Cuppcar. What are they trying to achieve? How are they trying to create value? What is the customer expecting? And whenever there's a suggestion in the exam, how will that impact upon that? We need to be careful of damaging the reputation of Cuppcar by allowing our salespeople perhaps to aggressively sell things which are generating commissions. Okay, then. Now it mentions here again about selling extended warranties, because remember, the standard warranties are offered by the manufacturer. And when Cuppcar does a repair under a standard warranty, they then invoice the manufacturer for the cost of that repair. Extended warranties are these warranties that are sold in addition to the standard warranty. And this is where the customers pay to extend that warranty. And Again, what normally happens in the case of the dealership is that they will sell an extended warranty and earn a commission from a company that actually provides that extended warranty. So most dealerships do not do this themselves. However, get ready for the exam. There could be a possibility of Cuppcar setting up to actually sell their own extended warranty. Now, when we think about warranties, again, think F2. And just as a general point, folks, when the examiner comments on the MCS exams after each sitting, the area of your knowledge that the examiner says is weakest is F2. And the examiners often say that students are actually really poor. They do not know the accounting for the things that they did that were covered in F2. You must make sure, for example, here, that you understand the need for Cuppcar to have a provision for warranty claims if they are providing their own warranty contracts. If they are agreeing to repair cars for the next 3 years at no cost to the customer, then that is a cost to the company and it needs to be provided for. Make sure you're all over provisions and warranties. Okay, then. It points out here that some dealerships do offer their own extended warranties. And that's where I'm going, whoa, risk. We've got a note here. We'd have to be really clear that we know we could sell that for more than it's going to cost us to actually do those repairs over the next 3 years. Okay, good. So just to take us to the end now of looking at the sort of industry in our pre-scene, we've got some information about different roles within the actual dealerships themselves. And this is going to be important for us to understand so that when we look at the same for Cuppcar itself, we can understand actually how Cuppcar operates, how it's different, perhaps in some areas, and also the kind of thinking that we should have about what responsibilities might be for these different people, about how they might be managed, so performance management, thinking about appraisals, perhaps, thinking about their targets and their personal objectives and KPIs that are set for them. A whole load of things going on here that to me are focusing in on some of that sort of P2E2 area. So also thinking about management and leadership styles. So we start off here with the dealership principal in charge of the whole of a single dealership. So we're thinking about each of those 214 Cuppcar dealership. I keep wanting to say cupcakes. Cupcakes are lovely little cakes, aren't they, that you might buy for a snack. Cuppcar is the company we're focusing in on. So forgive me if I ever slip and call them cupcakes. So we are thinking about 214 Cuppcar dealerships. Each one of those has a dealership principal. Now, look at what he does or she does. Their responsibilities are wide-ranging. They are supervising the departments within their dealership. They're overseeing inventories. And we've already focused, haven't we, on how important that inventory management is going to be. They're responsible for implementing marketing and promotional activities, which are being suggested by corporate strategy. So remember, as a finance manager here, we are going to be focusing in on how well some of these have been implemented, how we could monitor their implementation. So very much tying in with our role as a financial manager. They're responsible for customer satisfaction in their own dealership. Now, for all of these areas, think P2 and KPIs. If you were devising KPIs to monitor the performance of these staff roles, what kind would you put in place? And here are quite a few that we have considered. So these are good ones. Inventory turnover, for example. Compliance metrics is about, is this dealership complying with the manufacturer's stated performance targets in that dealership agreement? Very important. So you need to consider, what if in Cuppcar, the actual role of this person is a bit different? What kind of KPIs would you then set based on their specific responsibilities? Also, please do think a bit of E2, leadership models, ADARE and others. We might find given to us in the exam a bit about the culture in a dealership at Cuppcar. We might need to talk about management styles. we might be given a change that's going to happen within a dealership, and we might be asked about the nature of the management and how perhaps that should change. So leadership and management styles, could be important here. Also, just a little note here about conflict management. Within the dealership, there are different areas, there are different staff roles, there are different, if you like, departments, and there's going to be conflict, and it's going to be up to the dealership principal to manage those conflicts. Now, really important in this table is the bottom of this box. Dealership principals are rewarded on the basis of fixed salaries and also performance-related bonuses. And obviously, they are responsible for maintaining customer satisfaction. They are there to obviously ensure that their dealership is generating the sales. So thinking about performance-related bonuses based on sales volumes, about customer satisfaction, and also how that then will affect their behavior. And we need to be careful again, don't we, about making sure that when performance-related bonuses are in place, they are motivating the individual dealership principal here to act in the best interest of the whole of the company of Cuppcar, and not just in their own dealership's best interest. And I've already said earlier, haven't I, that there will be some element here of cars being moved around the whole of the network that Cuppcar has, about transfer pricing issues. And we need to also bear in mind that there's the conflict within a dealership between, the price that we might sell a used car for, compared to then the person who's then trying to sell that used car and make a margin on a sale of that used car. So there's loads of conflict within the dealership and between the dealerships within Cuppcar that are possible. So just a little bit of thought about how that could be managed. And, probably it's the dealership principal who's got to have an overall focus on making sure that that conflict is not destructive. Now, the sales managers and sales executives are the ones who are selling the cars. Now, I'm conscious of time, folks. So I know we've got till 15:15. So I'm going to just finish off this bit, and then I'll stop for any questions. So if you have got any questions that have cropped up so far, do put them in the chat box, and I'll answer as many as I can. But let me just get to the end of this bit first. Now, the sales executives are the people responsible for actually negotiating a sale. So obviously that word negotiation and their skills in that are going to be very important. And of course, they're going to have good product knowledge to give good advice to the customer. It's not good for the reputation of the dealership if they sell, for example, the most high spec car to a customer who might be, for example, of an older generation. They just want a nice car to do short distances every day. They're not doing big distances. They're not going to be driving at the maximum speed on a motorway. They don't need tinted glass. It's up to the sales executives to balance that conflict, isn't there, about selling the highest priced car to the customer, but also actually selling the customer the car that they actually need and want. They are going to be doing that selling. They also will be negotiating prices on a part exchange of their existing car. So again, the skills and knowledge and data, thinking again P2, data for decision making, they need at their fingertips about not only the new car they're selling, but the value that they could offer for the used car. That's all going to be very, very important. So well-trained, good product knowledge, good data, absolutely vital. The sales managers oversee those sales executives, and they will authorize any discounts that are being offered. So looking here, there about sort of controls and making sure that there are limits set for these sales managers. And perhaps there is perhaps there is a more centralized control and authorization of any high levels of discounts, or perhaps there is a block, and that's it, on any level of discount above a certain level. But there certainly needs to be controls in place there, doesn't there? Now, it points out that, KPIs set for these staff roles have got to really balance the needs of the whole of the partnership, not the individual needs of a specific dealership or even the specific needs of that specific roles that is selling that particular car or the additional services. We need to be setting KPIs that are motivating the staff to act in a way that is consistent with the goals of the whole organization. Now, these sales staff also have a performance-related bonus. Again, making sure that that encourages them to do the right thing and encourages them to generate profit for Cuppcar, but without encouraging them to do the wrong thing by the customer, and also without setting measures which they might want to achieve, which then could cause a problem to other parts of the business, particularly perhaps the workshops. Now, it is these salespeople who, P2, just for a minute, can provide those additional services to the customer. So they can be upselling, perhaps, in terms of selling the right type of car, in terms of considering and introducing the customer to the idea of other things that might be relevant to them. And then the business managers pick up with then negotiating those additional products and services. So the sales executives to do mainly with the sale of the actual cars, and then the business managers adding on those extra high margin items to the deal. So the business managers then, again, they've got performance related bonuses. They're wanting to sell these extra products and services. So here we're talking additional bundled up goods. So additional mats, new wheel trim, but also servicing contracts, extended warranties, financing arrangements, all of those generating commissions if they are done on a commissions basis. But again, trying not to do that to the detriment of actually being too aggressive and then upsetting the customer and then generating for themselves a poor reputation and dissatisfaction. Now, again, think KPIs. The business managers are trying to sell all these extra things that are in the workshop, the accessories, the parts, as well as selling the warranties, the extended, the maintenance agreements. So a few relevant KPIs here. Inventory turnover of those parts and accessories that they can sell. They're upselling and cross-selling. To what extent are they successful of selling these extra things? Their ability to sell finance and insurance. So what proportion, for example, of new car sales do they successfully manage to sell a finance arrangement for? So make sure you think about the relevant KPIs here. And then when we get into looking in the second pre-scene analysis webinar about what Cuppcar roles and what they all do, again, we can think about this again from Cuppcar's perspective, but we've now got it in context, haven't we? About what else, what would be typical within Welland. Now, the dealerships, the workshops themselves are going to be very different, aren't they? Now, what we have in the workshops is we have two types of staff, and really be clear about that. So we have service advisors. Now, these are the people you talk to as a customer when you want to get your car serviced or repaired. They are the front of the workshop, the customer dealing side of things. So they will help you to book your car in. They'll keep you informed of the progress. They could upsell as well, because they could suggest to the customer any kind of things that perhaps they would like to buy that could actually help them to prevent future repairs. So they are able to upsell workshop services. But note at the bottom, they only receive salaries in general. So whilst they are contributing to the generation of profits from selling these extra services, the service advisors are not getting any form of bonus to do with it. Now, on the one hand, we point out that's quite good, because from a customer's perspective, they're not being aggressively sold things. But on the other hand, we could also say from a company perspective, it's bad, because if we're not incentivizing and motivating these service advisors to sell these things, then they might not bother. So then we might be losing out on some element of income from this income stream. Now, the other staff in the workshop, of course, are the people who do the actual repairs. Now, think. They are doing the actual repairing. We need, technically skilled workshop staff for sure. We need people who will deliver the quality that is required of the car manufacturer for the servicing of the new cars, for the fixing of those cars under warranty. So remember, the car manufacturer is setting standards for this work for the new cars, which come back under warranty or service agreements. But from a reputation perspective, of course, all cars that come through the workshop the work should be done to a certain level of quality. So I'm just thinking total quality management again here. And I'm also thinking about quality targets for the workshop staff. So, for example, a returns rate. We don't want cars being repaired and then having to come back to have that repair work done again because it wasn't done correctly the first time. We want a low returns rate. And certainly that's a measure of quality for the workshop staff. First time fix rate. We want things to be fixed first time. Another measure of quality for the staff. Now, important little point here, very important to note, the routine service work on the new cars that is done under a warranty is charged at a standard price per job. So routine servicing under any kind of service agreement for a new car, Cuppcar would not be able to set their own price for that service. The servicing of those new cars is set by the manufacturer. The price is set by the manufacturer. All franchise dealerships have to fit in with that standard price per job. So when work is done in the workshop under a servicing agreement, then what will happen is the dealership will be invoicing the manufacturer for the cost of doing that work, but that is at a standard rate. So we need to bear in mind what's going to be really important here is managing that the cost of delivering that. So any prices that the customer is going to have to pay is set by the manufacturer. Any costs that are recovered but from the manufacturer for doing these would be set by the manufacturer, which means, doesn't it, that actually the only thing that the workshop can control here is their cost and efficiency. So the KPIs we've got here very much are focused on cost control and efficiency. And that then leads us to think about the use of IT. And we've mentioned here digital workforce. The people in the workforce being supplemented by robotics, automation, digital servicing software. And on that point, if you read about this, what we read about is actually, as we probably know, cars today, certainly newer cars, actually can diagnose their own problems. They have their own diagnosing software built within them. So when they go in for servicing, what needs to happen is the staff within the workshop can actually just download this diagnostic information. It tells them what to do. So that is something certainly that is an indicator of the sort of impact of the digital side to the workshop work. But also just think about how else we could use the impact of technology in the workforce to manage the workforce activities and to therefore achieve some of these KPIs. So obviously we don't want lots of time spent on a repair because time is money. So a good KPI here would be revenue per hour. You know, we want revenue from doing the servicing, but we want it to take as little time as possible. Labor efficiency, the turnaround times, you know, all of these KPIs relevant to the workshop staff are about managing the costs and their efficiency. Now, if there is work done by the workshop that is not routine, this can be priced up individually by the workshop. So if there is something not covered by a manufacturer's warranty or not covered by the servicing agreement, the dealership is free to negotiate a price with the customer. And for that, then we would be back to the dealership having some control. Important for you to understand, again, you know, what control Cuppcar actually has. And again, target costing coming in here, because it is still a very competitive market. And although non-routine servicing can be priced by the dealership themselves, there are 5,200 dealerships who might all be offering non-routine servicing. It's this competitive market. So again, looking at the competitors' pricing, setting a price, determining the margin that we want, and then aiming to deliver costs that deliver that margin, and then reducing our costs over time would be the aim of the game. Okay then, folks, I have hit my deadline and I have got to where I wanted to be. So where we are is we're set up nicely in webinar, the second webinar on your pre-scene analysis, which is happening on, let me just check. So that's happening on the 26th. We will then look at Cuppcar. So we'll go through Cuppcar itself. We'll look at their financials, and we'll also look at the exciting little media excerpts that we've got at the end of the pre-scene. So that's the end of me talking to you, which is probably a relief. And as I say, if this has been quite fast for you, and I'm clear that we're all over the world here, and some of us are working in English not being our first language, obviously you will have this recording uploaded for you to then replay. You can slow me down, and you can stop me, and you can pause me whenever you like. So for now, what I just want to do is just look at the chat box and just see what questions we've got and which of those I can answer now. And obviously we're at the end of our session, so if you need to bob off before I've answered those, that's absolutely fine. Yeah, so this will be recorded and it will be uploaded for you to access. Not absolutely sure about the mechanics of it, but it will be available to you in the course area. So you'll be able to do that. The annotated pre-scene, as far as I'm aware, will be uploaded and accessible for you. I think the date for that might be tomorrow or the day after, but it will be uploaded. At the moment, it's obviously a case of going back through the recording to see these annotations, but it will be uploaded for those of you who are booked onto the course. Okay, F2 being weaker. So I'm addressing these questions in reverse order. F2 being weaker, is there any particular area? No, actually, where it falls down everywhere. Consolidations is something regularly tested. The control of a subsidiary, significant influence in an associate, the difference in the accounting. That is regularly tested and is regularly said to be poorly understood and poorly explained. But equally, revenue recognition, poorly explained. IAS 37 and provisions and the need for them, poorly explained. Equally, obviously, within F2, I've always thought this doesn't really fit well, but within F2, we do have all of the financing stuff, don't we? So sources of finance, cost of capital. So that's also an area that needs to be covered in F2. I don't think that is the area that the examiners generally say is weak. It is more the actual physical accounting. So you do need to know your accounting standards from F2. You do need to be able to explain how something should be accounted for, not doing any calculations. And you do need to explain how that would impact on the financial statements of Cuppcar. Okay, then. So now I'm going back again. See any more questions? Would it be possible to have a different price for different branches within Cuppcar for the same model that they sell? Yeah, okay. So I think that would be absolutely possible because each dealership can set its own selling price. What would be important for the dealer, a specific dealership, is to look around it. Who are the competitors here? Where could the customer go to get this make of car? And it might be that there would be a different dealership within Cuppcar that the customer could go to. So yes, a specific Cuppcar dealership might be setting a price in competition with another Cuppcar dealership, but equally, they would definitely be setting a price compared to any other dealership of any other company that is within, I would say, traveling distance of a consumer. But then again, cars can be moved around. So it's also possible, isn't it, that a car that's at a different location could be moved across a specific company to a different one of its dealerships. But yes, I would say setting prices is absolutely a local decision. It is definitely based on who's the competition, but it's also based on having the right car for the customer segment locally. Working capital management. Yeah, so working capital management, I agree with you. It was covered in F1. But to the extent that to the extent it was covered in, to the extent that we do consider inventory management and we look at just in time, And we are thinking about the impact of things like just-in-time, total quality management on efficiency and inventory. To that extent, inventory management is definitely relevant at this level. Yeah, not the specifics perhaps of, exactly how do we calculate economic order quantity, but thinking about inventory management is definitely relevant here. Okay, then. So, yeah, this document will be uploaded. The links for the second seminar will be available. I think if you have purchased onto one of those courses, then the links will be available to you. And they'll certainly be available to you before the time of the actual webinar or the workshop. When it comes to access to things, I'm not the best person to be asking about those. So if you've booked on one of our courses, things will be made available to you that you're entitled to through the standard course or the elite course. If you've got any specific questions about when would that be, the best thing I think is to email info@vivatuition.com and they will be able to tell you that. Again, anything to do with pricing of the options for the elite course or the standard course, again, that's for info@vivatuition.com. Hayley, you've asked, can you ask questions of me? Because I'm your tutor throughout the whole of the course. So if you're on the standard course, I'm going to be doing the webinars. If you're on the elite course, I'm also going to do the workshops. Whenever I do a webinar, which is for everybody, I will have a question session like this at the end. So I'll be able to answer questions like this. If you're on the elite course, then the workshop will be run differently in that I will happily be taking questions throughout the workshops. So it will be a lot more interactive. Depending on how many of you, I might say, let's just use the chat box for that because it's just easier for me to manage. If it's a smaller number, I might say, let's stick our cameras on and stick our microphones on. So yes, there is the opportunity for both. If you're in the elite group, we have a tutor discussion forum on the community. And what I'll be doing with that is I'll be popping in different sort of things that I want to say, oh, look, I've read this is interesting. You can ask me questions on that tutor discussion forum. So if you're on the elite course, you've got that extra ability to sort of access me if you like. Let me just see if there's any other questions I can see. No, I haven't. I'll go back to the end. So yeah, absolutely. So we have got a couple of questions about what's coming up next. So if we're thinking about the webinars, we've got another webinar tomorrow, and that's where we just go for an hour, just looking at the industry in the real world. So what we've done today is the industry in Welland, according to CIMA's pre-seen. And what we're going to do tomorrow is just look a little bit about the real world. We don't have to be an expert in the real world, but we need to understand it to make sure that we are saying sensible things in our exam answers, really. So that's tomorrow. And then obviously we've got a second pre-seen analysis on Tuesday evening, UK time. Absolutely. Once you've gone through what we've done today, if there are any questions on that, then when I do the second pre-seen analysis webinar, I'll be more than happy for you to type any questions in the chat box. And at the end of that one, I'll again take questions. All right then, folks. So I hope that's good. Have a good rest of your day. And I will touch base with you again tomorrow for our industry analysis webinars. Well done for today. Go off and start thinking about Cuppcar. Bye, everybody.